Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
It was good. Just some really volatile days, but I think you're patient. Don't chase pre-market moves. You stick to a lot of the lessons we talked about. You can get a piece of some of these moves. I mean, especially the intraday recovery's been the best, safest thing to do lately. So it's that you get that initial pop sometimes, kind of a big fade, and then it comes back, or the pre-market gap down and it recovers. That's just kind of been where we're at. And I mean, to me, if you have something parked at a level that you definitely don't want to short it there. You wait and you catch the upside. So that was pretty much my thing all week. Stayed on UNH. Just seems to be moving up into earnings coming up. So that's been maybe my biggest one of the year so far.
Nice, nice. Definitely hypersensitive to Monday because it went the opposite way that I anticipated. So kind of stayed a little bit lower on the sizing and focused more on, the stuff that I want to be in, which kind of sent me to my final three because that's what that's been about lately is, finding some stuff you could swing. Um, did good in those U and G Footlocker, the U's in general. When I want to scalp, I literally just go to like Invax or Fubo or something like that. So
Yeah.
kind of just staying in charts that dictate the style I want to trade even right now. And then keeping it small last week. Didn't get a lot Friday either. Just really didn't have much trust in the market. Um, and I'm usually a don't trust Friday guy in general, so I'm sure we'll talk about that as we go on. But news is it. I am not getting up at 4 o'clock. I mean, I'm on the West Coast. I get up at 4 every morning and read news. I mean, we all know about my education. Like, I played sports. I'm the jock guy, right? We know. We know.
Yeah.
We all fucking know. It's not hidden. Like me reading at 4 o'clock in the morning should tell you guys something. I mean, it
Yeah.
really should tell you something. But finding two or three things that I think the news will bring attention to or pick it back up. Nikola did that last few weeks where it dropped several times in a row, like just pounding on the door. Just looking for stuff like that. Um, and to be honest with you, started to find some downside news for people too, in case they want to play that direction.
Um,
Um,
yeah, no, that's been good. And my whole approach with puts that I hope people are kind of picking up on is I like it when there's enough room to play it to a level. So like MSTR
mhm.
317 or coin 72 or whatever it is like that I think we're going to go test that. And so I like puts to that rather than looking for something to short to zero or some dramatic drop because I just think that's a lot harder to time. But you definitely get these pullbacks, and they're pretty significant in a lot of names. And you talked about trust. I posted early in the week that the only things I trusted this week really were some mega cap tech names that we were on. It was Microsoft for me, but there were several, and then crypto upside. It looked really resilient in the flow. I didn't see any impending news, but the mood is that the news is going to be positive. So you're seeing those start to take off a bit. And then they're also, I mean, the thing you have to keep in mind with crypto is they run them up to a point where when the news hits, they just fall right back to where they just were a few days ago. So that's why I don't think you really the you don't swing the large caps in that. I think you can maybe the smaller ones, but you just play the range, and the range is really good.
Yeah, no, 100%. I think we had that conversation. What your first point there about timing the move. And like the first thing that always pops into my head is like, yeah, no shit. Why do you think I play shares? Like that's
Yeah,
the
yeah,
first
right,
thing
right.
that always pops in my head. Um,
Yeah,
but even in a tougher market, which this year I'm not going to say because we've had 2 months of chop or whatever, sideways or whatever you want to call it, a little pullback, that this year has been bad. But even trading it shares in a bad market isn't hard. You just have to do a little bit of work and be picky. In a good market, you just can't miss. You just need your money in the market, right? It doesn't
Yeah.
matter whether you get 5% or 200%. That might be debatable, but you're getting something in a good market. So like that's why I've always kind of focused on that, and um, I'm assuming that that's again, as always, magnified in the option side. When it gets harder on the shares, like you're getting washed away because of the time factor. I assume in the options.
Uh, yeah, I mean, and here's an example. Microsoft, I think, went up 3.5% this week. Okay, that's the total. It went up 3% three different times. So you can see where on the option side, it's pretty easy to get on the wrong side of that if you try to chase, to the upside. And that's what most people do. And like a lot of people got destroyed on Friday because we had the big gap down. That report was just seemed way out of whack. They'll probably revise that down, by the way. But they're just kind of shorting the whole, and then the market flips on them, and so then they try to chase, then chase the upside. And at best, a lot of those people they'll start the day down $700, then they'll move even, maybe go up 100 or 200, and then they'll probably trade late in the day and give that back too. That's your typical options trader on Twitter. So that's why like I try to get us in a different frame of mind, try to find safer things, low IV, that's why my focus is there and not, just scalping 20 cents on the Qs or something.
Now, if you're gonna do that on like DNA or Fubo.
Yeah.
I mean, it's the
Yeah.
same price action, it's just a little safer for you. You don't have to worry about time. I mean,
Right. Right.
$20 is $20, right, people? I mean, if that's what it's
Yeah.
about, I mean, unless you're in it for the percent, I don't know who dropped that 4,000% play that was $84 last week, but I think it was Manziel. Hate saying
Yeah.
names on here, but I mean, come on, man. I mean, I went and let like that one. I was a little curious, so I went and looked at the volume. You're not. If you got 10, you were lucky. You know what I mean? So you
Yeah.
can't really get any sizing. So like someone made $800. Okay, good luck. I mean, it's just that stuff drives me crazy because it's not repeatable at all. Um,
No.
like what you do, it's proven it's repeatable. It just is really, I think, what most people deter from is like, oh look, it worked. How did it work? Oh shit, he's doing a lot of work. And then the like,
Yeah, and it's also it's why like I really don't like to follow the full history of contracts I post. I like to just follow this was the trade. Because like okay, so MSTR is a good example. There were several times where yeah, the stuff I bought early in the week that I traded for 20, 50, one of them went like 120%. By the end of the week, a couple of those were, 800% or 1,000%. But you can't. I don't see how you hold it through that. It's the number. It's a weekly. It pulled back several times to, points that would stop you out on the way up. So you just keep hitting it instead of like acting like, oh, I did the 10 bagger on this. I just don't see why you would hold a contract that long. Um, as the thetas go into nothing. And no one could have known it was going to go up 5% on Friday. You can trade that move as it happens, but you don't buy it Monday and expecting a 5% close to the week. That's just not how this works.
yeah, no, that's hope and pray for sure. Um,
Especially with what Bitcoin did. It made the nice move, but it still was we're still just in a range. It can't hold 28K yet, and 26 really won't break down. So we're just waiting.
yeah, yeah. Even though I'm kind of you know, I like to swing. I don't want to say I am. I kind of like to prefer to swing. I still love to read tape, and
Yeah.
like you see strength and weakness in there. And I mean, it's harder. I guess it's a little harder to see in the chart, but when you have them together, um, it's pretty easy to see. Like you kind of, because it's just repeat patterns, right? You see the same thing over and over again. Like this hits 184 and it just dies. It hit 184 again and it just dies. I mean, that could be the same candle and then does it for three candles, but you don't really see that in the candles. You know, you just kind of see the structure breaking down in the candles where you've seen it live for 15 minutes. Um, and I don't think people are doing that on the options. And I think that movement, like what's coming through, because I bring it up. I could probably show you on here. Um, I bring it up just like what's moved throughout the day, like on the large side on the options. Just occasionally when I'm bored, you know, because that's where we've been for the last 2 months.
Yeah, yeah,
I'll hop on something and say, all right, well, what's the option side look like? Um, you know, is there a tell every time I get on here and I had a good day on this stock? Is there a tell in the option so I can use it as something to look at? And so there's volume there for you guys to analyze on the day. You don't have to have whales or anything like that. Your broker has it. I mean, if are you even doing that? Like, I mean, I don't think most people are. I really
yeah.
don't. And it's that kind of stuff that drives me crazy when you then like not people in the room, just people in general, like have an overall like this is where it's going or this is why it broke down. It's like you didn't even read the whole book. You looked at the cover and judged it. And
Yeah.
that's where a lot of people currently are getting wrong because there's some pretty easy tells in that information that's leading to, I guess I'm going to say it this way, why I'm right right now, right? Like
Yeah.
and why you're right now.
Yeah.
Um, I asked you weeks ago about the top, and you were like, "No, we're not going there." And that was a big key in my September to January thesis.
Yeah, and it was a fairly simple, as far as SPY goes, fairly simple read on my end. It was this 1020 um 420p contract that was out there and was very bullish, and then under that it or was bearish, and then under that the puts were bullish, and it was all through puts, and which told me like they would need calls to break it to the upside. So that wasn't going to happen. It was just a question of how and when we reached basically where we are, and I think we'll have a pretty interesting conversation about where we go from here as I dig into that. But yeah, that was a pretty confident read for me. And even though I don't trade SPY very much, it's so important because it kind of defines what I'm looking for in a lot of other stuff. Um, and the resilience of Microsoft and Apple were telling me like, well, I don't think we're just going to collapse because those two alone, I think, are like 12% of SPY. But it does limit your upside, how long you want to stay in trades, and all that. And yeah, so as far as I post my notes, and I know people do follow me into trades, even though it's not alerts. I mean, but that's why I post it. There's setups I want people to trade. I think that what I do want people to realize is that as you adapt your own style, that you have to understand what my style is going into posting those. That these are usually early day moves I'm seeing, and I'm wanting to go ahead and get in and get out and maybe leave a few. And my whole mindset for trading always is I want to get this done early, and then I can just get to work on the more sustained longer term stuff. I like the quick hitters early. I'm able to read that from the flow from the day before, but it's difficult when people are going back to that two, three, four times during the day. Your risk goes up to me as you keep trying to do that because the setup I posted isn't maybe there anymore. That's how options are like that. It's kind of ephemeral. It just dissipates, and we're in a new setup. So that would be the only thing I caution people about with that. And if it's a really strong level, that's a little different. But some of that stuff I see just initially, those are quick. So you can't just watch it happen and then think you can just go repeat it 20 minutes later.
Yeah, I don't know much about that stuff, and it just seems like I also would want to add, don't play the other way against it
Yeah.
either. Like that
Yeah.
that like just because you're late, don't look for the other direction on the same thing. Um, that seems
Oh
like
yeah,
bad
because that
idea. I could
it
be
can
wrong, but
right. If you pull up something like SMCI when I'm like looking for that initial pop it open. It does pull back, but it'll rip your face off the other way too. Like the way that dips and rips. It's just yeah, you got to be really careful
yeah,
trying to short anything that
it
I'm
doesn't
posting.
even make the previous day low ever.
Yeah.
Yeah, yeah, I see that. Interesting. Um, probably a good time to rotate into rotation.
Yeah.
Um, that's to me the if there's one thing you can nail, I can't believe I'm saying this because I believe in a lot of things. If there's one thing you can nail and want to become very rich and successful and low stress, it's proper market rotation. If you can be ahead of
Yeah.
that, you're gonna do fine. Like no matter what, you almost can't lose. Um, we're in a weird spot right now because a lot of things that people go to are still 50, 100, 200% up. Um, and then your like defensive stuff is just I'll go out and say
The
it. I'll go out and say it. It just doesn't look like a sound investment, like a good risk reward ratio on a lot
uh
of stuff.
yeah, the brutality of the sell-off in staples was pretty remarkable. And I was bearish on MKC. And it was funny. I was actually buying their spices yesterday and thinking, well, they're still in business, I guess.
Oh God.
But the way that it sold off on earnings and then kept falling, Coke and Pepsi having 3-4% days down is pretty rare. And I wonder when you look at the rationale for that. I mean, the I don't follow I follow the bond market, not really that into that, but the return that people get on some of these bonds is, I think, better than the dividend that they get for Coke and stuff like that. So, I mean, I'm wondering if that's part of the reason, but yeah, the traditional flight to safety, um, it's really died. It died first with the big banks. You're not seeing the money go into them. They're hitting 52-week lows here and there, and then the way, yeah, consumer defensive is not functioning as normal. Was what I would say. So definitely something to be aware of.
Yeah, no, that totally makes sense. I just always looked at it from like there's better risk reward stuff out there, but the you also have the alternative. So um,
Yeah.
I totally understand that. I've been watching Ford and Coke, um, and I always go back to like the fair market value of the stock, and
Yeah.
they just don't have that. I mean, if you look at even Ford's the best example for me. If you look at it, it's I'll pull it up quick. It's like it's either it's on a good level here, $11, but 11.50, but $5 was like the bottom. We got to go out farther here. And 25 was the top. Even though there's like a
Yeah.
great ratio there, it still seems like it's failing. I lack of better terms, it still seems like it's failing. The other stuff, Coke and the ones you mentioned have already kind of failed. So there's
Yes.
probably some opportunity in some of those names, but I don't think it's the right way
Uh,
for what I play.
yeah. You get into a potential value trap. I think is what is a term. And it's one of those terms people overuse, but I think it's applicable sometimes. So I've only ever had anyone DM me about buying Ford when it was $22,
Oh Jesus.
which is kind of funny. But yeah, like now,
Home Depot and
I
Lowe's
don't.
too. That was the other two. Yeah,
Oh yeah, yeah.
that was
Like
the other two.
I don't think you're just gonna get killed on these long term, but I wouldn't expect them to. I wouldn't expect to hit the bottom on them either. They can just stagnate for a long time, and the way that money pours into make the mega cap tech, the way that Microsoft could cannibalize a lot of things that some of the smaller tech stocks do, I wouldn't necessarily just assume that that's going to change either. I think they could keep piling into those, and and that could be the kind of market that we're in. So looking for the great deal on some of these more defensive stocks isn't to me going to be a quick swing trade that's going to make you a lot of money, at least right now.
Yeah, yeah. I mean, no, there's a lot more going on just in general. I'll use
You know,
too that.
AT&T is another one that fits your whole thing. Like it's similar to Ford in some ways. That
Is that
chart.
just T? That's just T, correct?
T, yeah,
Yeah, yeah. The I you know me, I always got to talk about charts. I know, but it's kind of like Tesla and Disney comparison. You know, the establishment versus something fairly new,
yeah,
and anything Coke, you can put Coke, the Home Depot, Lowe's. They all have assets and brands and names and all this crap under that umbrella, right? Um, they're probably in the worst case scenario going to sell off those, and you're seeing it now. People are selling brands and stuff right now, um, and divisions of their company or splitting the company, and that's just to defend profits. And I think you're gonna you have that option in a thing like Disney. Just to make this shorter, you have that option for things like that in Disney, but you don't in Tesla. Like it's out of business, or we keep going, right? We keep the lights on.
yeah.
We're not breaking up our battery department because we're usually too small. Tesla's probably not a great example on that side. Um, so you have more hope. That's the whole point of that. There's not hope. What the is the hope in Coke? Let me know. What hope do you got? They're gonna come out with some diabetes-free Coke. Is
Yeah,
that what we're looking for? I mean, because
right,
there's no
right.
hope there, and I think that's a big part of it right now too. Not only in current world climate and events, but just in the generational thing, right? Like the people that are coming up and new to investing or interested, they're not trying to like put away a nest egg. That's not who's interested. The people that are interested in the next best thing, and it's not diabetic Coke.
Yeah, and I look at I think it's really important that you look at some of these recent earnings reports. You really got to start to believe what they're telling you. And when people talk about that, like they're thinking of, like Nvidia and like the AI pumping or whatever. No, I mean like Target.
Mm-hmm.
When Target tells you these are the issues right now, these are the problems we're facing, whether it's, shrinkage or, or whatever, and then you call up that monthly chart. I mean, are you like someone's going to catch the bottom on this? Is it going to be you? Is $100 going to really, is that going to be it? Or is this going to go to 80 or 60 or, whatever? So I think when you get into it, um, start thinking about kind of the worst case scenarios, and don't fall into the thing with these dividend bro accounts that talk about all the great returns you'll get on that. How much money are you going to put in to really get a meaningful dividend out of this? And do you want to park money in there and watch the underlying just, continue to fall as you get that dividend? So, I mean, yeah, the dividend thing can be good, but look at how much you have to put in to really make that worth it. So, um,
The target issue in general is probably a better way to say what I was trying to say about the investing angle is look at the people shopping angle. You know,
yeah,
old people go to the local candy corner store. Young people go to Amazon Prime. So again, there's
right.
just a rotation in the habits and the wants and the needs and how things are handled in shopping. And that's the same with
Yeah.
investing. I just think that we're going to see that in the next 10 years. I mean, it's a big curve, but there's just not going to be much value in those old school. This company's going to be around forever, and I'm just going to get the dividend. You know, it's just not. And a lot of I've talked about it before, how tech companies switched from dividend to stock based performance and stuff like that. And I think that's why one of the reasons why it's just again there's more hope there.
Yeah, and
No
with
one
the
wants slow and there's no slow and steady path to a Lambo. I mean, there's just
and
not.
while these companies like Target, I mean, they do online retail. Number one, they still got all the brick and mortar stores to deal with, and which ones are going to close. Are they going to open new ones? What would cause them to do that? Like, so you have that element that makes it more difficult. And then I think just as it's worth it as a from a user perspective, the Target website for ordering is not even close to as streamlined as Amazon.
Oh yeah,
They're
yeah.
so far behind. Or you look at Macy's.
Who fucking
Yeah,
knows?
Macy's sells online, but they're like way the hell behind. So, so I think looking at who is taking online retail, that transition seriously, who has kind of the best user experience for that, those are some things probably to look at too if you're, thinking from the investment angle, because that's clearly not going to go away. The online shopping thing's
It's gonna be the
going to be here.
standard. I mean,
Yeah.
you so AI taking over jobs. I mean, okay, sure, nobody's gonna have work. They're just all gonna go away. Hell no, there's gonna be a bunch of
Yeah.
delivery people. I guarantee you that. I mean, someone's gonna
Oh yeah.
find a way to profit off of that side of it. It's just not done right now. It's kind of done through a different profitable business, which was DoorDash and Uber Eats and stuff, Postmates or whatever, all that crap, right? Like that's
Yeah.
gonna evolve and evolve to where someone's getting a 1.3% of every shipping order or whatever, and they're going to do $1 billion of business to make millions of dollars. That's how America works. Like, just be here for it. Try to be ahead of it. But thinking like,
Yeah, and if you look at, I'm kind of a word guy. If you look at the word logistics
yep,
and the usage of that word over the past 10 years, I mean, it looks like a parabolic, like penny stock chart or something, where like the just the amount that word is used or looked up or whatever, has just skyrocketed, and that's kind of where a lot of the job growth I think is going to happen, is
yep,
companies figuring out how to get our stuff from here to there in the most efficient way possible.
yeah. I was gonna say I don't know many words, but I know that one, and that
Yeah.
is about getting set up to be efficient, and that's who wins.
Yeah.
Again, if you
Yep.
can be just a percentage more efficient, that's where you're going to make the money because it's America is done on volume. That's where Target and Walmart and all those guys win is on volume. If they
Yeah.
split their volume, they cannot stay in business. And that's how they're going
Yeah.
to die. These other companies we're talking about, with half a Target business, they will flourish. So, and
Yeah.
that's going to probably be the same. I mean, I don't know much. I don't drink much soda, but that's probably the same for Coke. Ford has its competition. Ford, I mean, it's Tesla, right? It's Rivian. It's Polestar. It's Lucid. It's Fisker. It's Solo. Ah, um,
Well, with Coke, there's a reason that it keeps coming up with us, but the Mexican Coke stock ticker,
yeah,
I actually like that one a lot better, because there's growth in the developing world, that you're not going to be able to achieve in the U.S. Growth from here.
sure.
I think your business declines there. I think it can grow in other places, South America, India, wherever. But yeah, that's why I stay on some of these international setups. It's not just for fun. It's a way to find opportunities and also kind of protect yourself in a kind of shifting global marketplace too.
Speaking of that, man, what's going on in this world?
Yeah.
God damn. You know my
uh,
conspiracy theory, but posted the I've already seen more of the
oh yeah,
Israel stuff
no,
than the Ukraine
the
stuff.
media framing of it is definitely significant. The finding what it could be like four or five people, but someone in Toronto, a group of people celebrating that
Yeah,
attack,
yeah,
the
yeah.
way that they use that
Yep.
to kind of fuel media narratives too, and to sort of bring the conflict to the West. That's something that's an angle that was not there in the Ukraine war, that I think they'll try to hammer home with this one. And I encourage anybody. It doesn't matter your political alignment or whatever, but understand how propaganda works, and the way that like they try to. I use that vague they, but like the way that a narrative kind of a media narrative takes shape, and then both sides will try to use that to sort of advance their angle. And then on the trading side, the market sensitivity to those narratives is kind of what we're after.
Yeah, man, never let a crisis go unused. That's for sure, or whatever they say about that. Like, you can't let
Yeah.
it go to waste. Um, anyone that's I don't want to know. Say like let's say anyone that's 25 or less. There's not been a week that went by in your lifetime where bombs ain't dropped in that country. Let's just be honest.
Yeah.
That's a weekly thing, and I'm not exaggerating. It's not day. I won't say daily, but
Right.
once a week a bomb has went off in that country every day of your life if you're 25 or younger, and that's just what it is. And that's what we get for putting two groups that hate each other in the middle of a desert, together. Um,
Yeah.
but yeah, I don't think like well the $6 billion thing's kind of making us look bad, but I don't. I mean, again, I don't think the timing of it was anything but how do we use it to our advantage. And I for me it's like how long did we get notified about it, because it's not going away. Again, it's happened every week for the last 25 years. So does it get more intense sometimes? Sure. Is it pretty intense right now? I'd say it's at about a 6
Yeah.
for there. Usually you don't get this much blowback from David, as I like to call it, because it's totally a David and Goliath
Right. Yeah.
situation
No.
going
The
on.
the I mean, you remember when, in terms of like media coverage, when they started putting cameras on missiles
Oh
like
yeah,
Desert Storm
yeah, oh yeah.
and all that.
Prime
And I mean, the
time.
thing
That was
now is,
prime time night vision. That was great.
yeah, yeah. And the thing now are these like the drones, right? Where you get like that's one angle that you're seeing, and that's been going on every day in Ukraine. And like you said, it's not making the national news as much, but you're going to see a lot of that. And then of course the citizen journalist, everybody with the cell phone, that angle is going to be pretty big too. So they can keep this swirling for as long as they want to, and it's just a question of how long. I agree, because nothing's really going to get. I mean, do we really think any big resolution is going to happen here?
No,
I mean, what would be the catalyst for that? So,
no, no. I
yeah,
assume my first reaction before I seen severity of things was that it was just to take the heat off this government shut. So we don't talk about a government shutdown for 3.5 weeks, because
yeah,
the Democrats are definitely not in control, and that is the most important thing for them right now is the perception of control, because the leader does not look like he has much. That's about as simple as I can put
yeah,
that. Yeah, so we kind of both on the same page there that that's gonna bleed out of the news pretty short. That's just a big pop, and it's gonna fade. Had to get that in there.
yeah.
Which I think that'll be good for the market. I don't trust Fridays, but I think that'll be good overall. Good time to rotate into SPY here. Um,
Yeah.
I think that'll be good overall. I had it wrong. Well, I had the bottom right, but I had it wrong. Like I really thought we were going to close below 420 on Friday. I don't know what that was about. Um, Interested on what your take is.
Yeah. I mean, when people try to explain that rally all day, you could look at it as, it's option driven. I mean, that's the simplest explanation. Another is that the given that that job print just way above the
Yeah,
expectation, that it kind of fuels the soft landing narrative potentially, and that could be part of it, like, the Fed easing up, or first quarter rate cut, or whatever. That kind of be part of it too. I think for me, it was just that I had so many stocks I follow just open. They pull back and opened at a level that has not broken down yet.
hmm
So it's just the path of least resistance was up on a lot of stuff I follow. So that was I try to keep it simple, and that's just why, like I say, don't chase puts. That was a perfect example of why um, anyone who chased puts got really killed on that. So yeah.
yeah. I'm glad we ended the change. Those pennies are important.
Yeah.
420.18 was the bottom. I missed that by 17 cents. You missed it by 18, sir, so you were way farther off than me. Uh, and I think it's like a buck 50 off the top. Um, you maybe
Yeah.
250 off the top. Nothing crazy, but yeah, for me, I'm a little confused because of Friday. But without Friday, I would have had a little bit more of a thesis on it, I guess you would say. But for
Yeah.
for me, that range seems like it's very undecided. I mean, $10 on Friday without really much news. If there was any, it was. I mean, it's okay. The jobs report was okay. Um, but for me, I feel like we're going to have a pretty volatile end of the year. As to kind of
Yeah.
buffer off what you said, I think they missed the boat. And I haven't really said this much, and I should have said it a lot more because I talked about it when it happened. But we had the recession last summer. They just changed the goddamn definition on it. It's two negative quarters of GDP. We already did that. And if they would have got to this point by now, they could have said we got through the recession. They could have sold us that we are soft landed here at 25% inflation because that's basically where we are. Inflation's not 3%, 4%. If you go get a can of beans and a can of milk and a gallon of gas, it's about 25%. That's about a good standard number you're going to find. Um, so that's kind of where they are, and now where without that you still have a fear that we have to go in recession. They've taken the hard landing out of the equation. It's either soft
Yeah.
landing or long, higher for longer, which really
No
is what I.
landing.
Yeah,
Yeah.
it's higher for longer, which really is what I think they want. I don't think it's what we need, but I think it's what they want. Um, just to kind of shock the system a little bit for all you younger people. I mean, the interest rates used to be 18, 20% in the 80s. Like they were really high. And they kind of whittled their way down to nothing. So I think the market is trying to figure that part out. Um, the soft landing higher for longer to understand the playing field for the next 3 or 4 years because we want to go up. If you haven't figured that out this year, the market is ready to go back to where it just gains that 5 to 15% a year. That's what it wants to do,
Yeah.
but it needs to know the playing field. Um, and I gave September to January, just a smaller window for bottoms here. That's just one little dip on this chart. That's just one of these guys. That's just one of these guys, right? Like there's been
Yeah.
two since October. We've had two of those. So um, I don't think we're out of the woods yet. Um, as far as it comes to spy, but obviously 420 is pretty important. P. Um, there's
Yeah.
something there. There's something there. So I don't think we break that without news. Still, that's where that whole that's where that long-winded ass thing was going.
Uh, yeah. So the when you talk about like Friday kind of um going against your expectations to the upside a bit,
Yeah,
very possible that this futures open and tomorrow's pre-market is going to take it back to where you think we should have been, to close Friday, because we could get that gap down. I'm kind of looking for that to happen, and then again, it's not something I would chase because I just think it's like okay, we sort of reset, maybe not all the way back, but we're probably going to open red, and then we reset and where do we go from there? On the option side of things, so here's this kind of the story for what options are doing. The top 15 contracts in open interest on SPY are all puts. I think one was a call last week, but they're all puts. And so then it's a question of how I read these in terms of recent volume, bid ask side, where they wanting to do this. 1020 420p is still the most active contract in terms of volume to open interest. So then it's still leaning bearish. So 420 is still going to be kind of the big pivot. Now underneath that, where does that start to come in? Well, you do have some 1020 415p leaning a little bit bearish. So I think we could get some drops under 420. I just don't know that they can really sustain that because anything 400 is mostly bid side for the most part. January 400 though has come into play a bit. I would kind of keep an eye on that, but all the October November stuff, um, 415 is about it. So to me, when I read that, I think we get maybe some dips to 417, 418, but I'm not seeing much below that.
See, and I'm just not patient right now, is what it feels like. Because I mean,
Yeah.
my overall thesis is right, and my week to week thesis is depending on the week, because
Yeah.
it's not taking that into account too much. Because I fully expected us to do what you're saying, like Friday, but it sounds like that's gonna take, again, the 3 day rule is a 3 week rule. I mean, that's what it just sounds
Yeah.
like where we are. Um, Hard to trade this chart, I assume, unless you're just really good at the overextended levels on the intraday. I mean, that's all you're playing, is that it's not going to break out. Um,
Yeah, well, I could take you through. Here was my mindset Friday when you look at my notes. I was like, I like some puts really early, probably going to be pretty fast, and that's what happened. I did a AVGO, like I think 80% puts. I didn't do calls, but that clearly was the move because it made a 3% move off the bottom. I have some longer term stuff in it, but that the fact that SPY was already at 420, it was just kind of like we're not going to stay under that very long. I didn't expect it to go that much to the upside. I thought we'd get kind of a choppy day, but yeah, that to me is the best read right now is are those big levels and just trusting that we're going to see the level a lot and not trusting that we're going to break down and stay there. That's kind of my whole approach here. Is that any of the selling, they're having a lot of trouble sustaining it once we get down here. So I think that's gonna continue. I'm not overly optimistic for the upside either, but yeah, you don't want to try to short
yeah,
spy around 4.
let me ask that. I mean, because we kind of been like shooting the moon on like 460, 460, yada yada yada.
Yeah.
For me right now, the question is, does it not? I mean, because 420 showed a lot of strength last week, and we're closer. Well, I guess we're middle now. Just 430 throwing me off. But is it more likely that we break 440 before, or 420 first? Because 420 does look strong, but I mean, that's the thesis says that's what happens.
Yeah. I think 420 breaks down briefly, and you get like a wick to 416 or something like that. But then we start to move back up. And I would say my top for the rest of the year right now, 447 or maybe test 450, but that's about it.
Yeah, that's
Which is a good,
443.
which would be a nice rally.
I got
So
yeah. So I mean, I'm a little wider, but I'm just VPing it. You know, you're 411, which we talked about last week. Wait,
yeah,
411.09. Sorry, I could change
yeah,
that. And then this 443.42, which is again $4 from where you're at percent, but those, yeah, that makes sense. That's what I'm trying to figure out in this conversation. That's the whole point of it, is where's the range? Like, what are, because for me, it looks like it can get stuck in this 420, 430 channel for quite some time. And yeah, I think you get washed on the option side doing that. Which, is that what happened back here in June? Like this kind of action where it just didn't really want to go. Um,
yeah. I mean, I think that in here, if anyone listening to this who wanted to swing spy, it was when we started talking about October 420. You could have bought that then for about $150, and when it's gone over 500 several times. So that was the swing on SPY. I don't see a good swing on SPY from here. I think you're better off
Individuals,
looking at Amazon.
individual names,
You
yeah,
know,
individual names.
individual names, yeah, and so it might seem weird, like, well, how could Amazon be a good swing when Spy's acting all choppy like this? Because that's where the money within the fund. That's where the money's concentrating is the mega cap tech. So that's kind of what you have to look at, or you look at the smaller stuff that isn't as sensitive to Spy and doesn't really care what it's doing, and it's going to kind of do its thing, and that's sort of where we stand out is finding those names too.
There's some natural gas ETFs too. You might want to look at. I don't know.
Yeah, right.
I already wrote my numbers down because I'm not saying pissing in the wind, but I'm caught between two directions, and I'm gonna
Yeah,
go with. I'm gonna really lean on what you already said, so I don't want to take your numbers from you.
sure.
And I'm gonna go with my overall thesis. So 433.74 to the top, and I don't think that's gonna happen Monday morning. And then 418.17. Um, yeah, I think it has to happen. I think it's healthy if it happens. I want to
Yeah,
see what it does when it happens. That's when I'm gonna be watching the tape on Spy. If I do watch tape on Spy, which I probably won't be watching tape on Spy. But if I was a Spy trader, that's when I'd be watching tape on Spy. Is when it broke 420. Because when you see a big ass bids just keep piling in, that's a good place to land. Um, yeah.
I like it. So I'm gonna go 417.54 on the bottom,
54, so
and
close there.
yeah, and then I'm gonna say 432.49.
All right, so you are bracketed a little lower than me this week, basically.
Yeah,
But we're similar range, which I think that's important. It's one thing we're really good at, in general, is the amount that candle thing you talked about a few weeks ago, the body and the wick thing with the.
yeah, yeah.
Um, so
No,
yeah,
and I mean, I mean, honestly, I was kind of a flow first trader, and I didn't even really pay much attention to that. But it's such an important element, and there's just so many times where the body of the candle stops right at a strike I'm looking at, and it's like I now know why that is, because that's when they hit their strikes are targets on a lot of stuff I follow. So they hit their target, they start to move out. You get some leftover buying come in, but without them rolling it, pushing it to a new strike, that's buying's going to start to fail, and that's what the wick's all about. Um, so yeah, that's such an important element of it.
you can. That's actually a good visual representation of what happened. It's just late, right?
Yeah. Yep.
You get to wait for the candle to close, and it's already down the street. That's perfect.
Yeah.
Awesome. You ready to get to work? We're a little late here, so
Yeah. Yeah. We're good.
perfect.